Fantastic. I'm seeing a lot of familiar faces or familiar names in the chat. A lot of Nashville folks, a lot of Tennesseans. Happy to have you guys. And again, I want to welcome you guys and also encourage you to drop any questions you may have in the chat, anything that you want to make sure we address. I'm going to be marking things as questions to make sure before that we wrap up this evening, we cover everyone's questions. So feel free to take this time to drop any questions in the chat or to tell us about your business, how long you've been in business, what you're looking to learn tonight, where you're located. Let's make sure this is interactive and a fun time. We know that financial stuff can be boring, and that's why a lot of times we don't deal with it as business owners. So I really want this to be interactive this evening, and I want to make sure that you guys get everything that you came to get from this session. One of our panelists is trying to join and having some technical difficulties, so you may see him pop in and out. Well, hopefully we'll be able to get him on. We can see him, but we just can't see him here. I can hear you. Tell him he's kind of low, so if he can maybe move closer, but we can hear you, John. We may need you to speak up a little bit because you sound a little far away, but fantastic. All right, we have some great people in the room, some amazing panelists, some amazing attendees. I'm seeing a lot of folks that I know here from the Nashville area, so I'm really excited. I'm really excited to have you guys. And it is 6:59 Central Time. And so we are going to go ahead and jump on in. Again, my name is Danielle McGee. For those that don't know me, I'm the founder of Black Business Boom. We are dedicated to giving Black business owners what they need to create wealth in their communities using entrepreneurship and technology. So tonight, we're going to be talking specifically around how to get funding as a Black business owner. And I want to give you all a few stats because this was really important for me to do. I like to be very clear that I am not a financial person. So I brought in some heavy hitters, some folks that have been in this industry for years that are going to educate us this evening. This is all about educating Black business owners. And I want to tell you why, and I'm going to give you a few stats on why I decided this was a great idea. So Black business owners receive less business financing. And in a lot of cases, when they do get financing, it's at a higher rate. Not only that, 37.9% of Black business owners say they're discouraged from applying for loans. And I think not only are Black business owners discouraged from applying, we're intimidated a lot of times by the process. And we don't know what we don't know. And so I want you guys to not be intimidated by this process any longer if you have been. So that's one of the reasons why we're here tonight, because we want to break down those walls, educate Black business owners, and give you the resources you need to be able to go and get the funding you need to start and scale your businesses. And the last stat I want to give you guys is that only 1% of Black business owners obtain business loans in their first year of being in business, compared to 7% of white-owned firms. So again, we're behind the 8 ball, and I think many times it's just an education gap, and it's important that we're educating our community. So again, I've brought in an amazing panel of bankers that have been doing this for years. I am really excited about this evening. So I want to just tell you a little bit about what to expect from the rest of our evening together. I'm going to introduce you to our panelists. Then we're going to talk about the 5 C's of credit. And so the 5 C's of credit are what lenders typically are looking at when they're evaluating a loan application. So it's important that we know what the lenders are looking for. It's not all about your credit score. There are a lot of other things that are taken into account when you apply for a loan. So we're going to dive into some of those things. Then we're going to have a little roundtable discussion where we're going to start to talk about what type of documentation you should have before you approach a bank, what you should be doing now if you're going to start looking for funding in the future. If you're a startup, what type of loans or funding may be available for you? What type of loans are available to small businesses? And we're going to talk a little bit about business credit. So we're going to cover a lot of things tonight, and then we're going to end by talking about Bridge Built by Citi, which I'm really excited to be in collaboration with for this webinar. This platform was built specifically to support small and medium-sized minority-owned businesses, specifically Black-owned businesses. So I'm really excited about our agenda tonight, and we are going to go ahead and jump on in. We're learning about our panelists. So first up, we have Doug Janer from First Farmers Bank. Doug, would you jump on in and tell us a little bit about yourself?
Good evening, Danielle. Thanks for letting me join tonight. I am a business banker with First Farmers Bank. First Farmers Bank is based in Columbia, Tennessee. We've got about 22 branches in 8 counties across Middle Tennessee. I myself have been a business banker for over 20 years, working across many different sizes of banks, large national banks all the way down to small regional banks like First Farmers Bank. And we're absolutely excited to be participating tonight. So thank you for your invite.
Absolutely. Thank you so much for joining me. I'm so excited to have such an experienced business banker here this evening. Now, Don is the SBA director at Citi. Don, tell us a little bit about yourself.
Well, again, thank you, Danielle. Gentlemen, good to meet you both. And more importantly, everybody who joined this evening in the virtual audience. I hope you learned something at the end of these 60 minutes and take lots of notes, ask hard questions. We're here to answer them. I work for Citibank, and I'm the national manager of our Small Business Administration Lending Program here at the Commercial Bank. And that's SBA, the federal agency. You probably are more familiar with them now than you might have been 2 years ago because of the Paycheck Protection Program, the Emergency Disaster Loan Program, all of these efforts that were put in place by Congress through the SBA to help small businesses of every size and persuasion across the country and all the territories. My personal experience, I've been doing this for about 31 years as of last month. I started in economic development, small business development in the South Bronx, on the Danielle side of the coin, fighting to get my small business constituents. I'm a Hispanic American, trying to find ways to get minority businesses access to capital, which is how I stumbled upon SBA those many decades ago at this point. Really very happy to be here and happy to really get into it. I've served on a number of panels over the last years, and I hope I can bring some experience and answer some of your direct questions on how to be access to capital ready for you to get the kind of funding that you need in order to grow your business or in fact start it. So thank you, Danielle, and look forward to the conversation.
Absolutely. Thank you so much. And lastly, we have John Ankar from Liberty Bank. John, can you hear me, John? Okay, you're a little low.
I can hear you loud and clear.
Okay, we can hear you now. I think we can hear you now.
Great. I'm glad to be here. I'm glad to have been invited. Again, my name is John Ankar. I'm a senior vice president of Liberty Bank, a minority bank here at the corporate office in New Orleans. I've been in banking for 42 years, from the day that I graduated from Xavier University, historically black college. Liberty Bank has been here in existence for, I think it'll be 50 years coming up. And we're in 9 different states right now, and we're growing. We're right under $1 billion in assets. And obviously, our sole purpose is to help minorities and others. We're very diverse, our staff as well as our customer base. First of all, we try our best to get the financing needed to minority owners.
Fantastic. You have your connection's a little shaky, but we're gonna keep on rolling. We appreciate you so much. You know, we're giving each other grace these days. We're still in this virtual world and trying to make the best of it. So we just appreciate you so much for joining, John. All righty, let's go ahead and jump on in. Let's start to talk about the 5 C's of credit. This is something I had no idea existed. You know, I just thought my credit score was all that mattered. If I was trying to go get a loan from a bank, I needed to just make sure that my personal credit was good and I would be able to go and do that. And I think a lot of us have learned the hard way that that's not all that matters. So we're going to dive into the 5 C's of credit. The first one being capacity. And it's definitely one of the most important of the 5. So what is your capacity like to actually repay a loan? And I'm actually going to come to you, Don, for you to talk a little bit about capacity and how lenders examine an application and what they use to determine the capacity of the borrower to pay that loan back.
You bet. Thank you, Danielle. And I'd invite my colleagues on the panel here to jump in if I miss anything. Keep me honest. We all, I think, are coming at this from the same direction. Capacity really refers to, in the most simplistic of terms, how old is your business, and have you had a track record of earning income and being able to pay debts that are beyond the day-to-day. So, for example, if Danielle Inc. is a wonderful business based in Nashville, and she's a $10 million a year small business, has a staff of 25 people, has gone through COVID, and now she's looking to buy her first professional real estate, her first commercial real estate, but she's been renting for the last 5 years. It's now time to be an owner. Well, she's looking for long-term debt. So what I'm going to look at, and I imagine my colleagues as well, is we're going to look at her capacity to repay that debt. So think of it this way. If everybody who owes you money, all of your customers, all of those folks, went up to Danielle and Danielle said, I need you to pay me back. And then Danielle pays all of her bills, everybody that she owes money to, hopefully she's in the black. She's in the money. She's got extra cash flow to pay that debt back. That's a really very simple, but a very straightforward, very, very clear way of thinking about capacity. Do you have the means to pay back the loan over a period of time with the set conditions of interest and amortization, which just means how long you're going to take to pay it off, and the schedule that interest applies, and being practical about it. So you never want to take on more debt than you can comfortably pay off in a reasonable amount of time. That's capacity.
I think you hit that head on, and I don't think anybody else could say it any better. I think what makes it more difficult is when someone is trying to start their business and they're leaving their source of income behind, and now they're starting from scratch. That's very difficult to do, and it usually helps if the spouse continues to work in her capacity.
Or his.
Yes. So that all helps. Any source of steady stream of income that the bank can rely on is essential.
Yeah. Danielle, I think we're having trouble hearing you.
There we go.
There we go. Thank you.
So that was a great point. I'm really glad that you brought that up. And I'm going to ask you, Doug, if you can piggyback a little bit and just talk about things other than, as you said, having a spouse that may have a steady stream of income. I know that many of the folks that are tuned in, as well as a lot of my audience of Black business owners, are still working in their jobs, right? So many folks are looking to plan to eventually leave their job, but they're not in a position to do so. So does that income that you're getting from your job, will that help you Or does it look, I think a lot of times we look at it like I've had investors to say, well, you're still working in this job, so you may not be able to devote all of the energy and time to your business to be able to grow your revenue as a startup. So having a job, does that really hurt or harm you, or is that something that a lender would even look at?
Well, I think it might depend on the size of the request. I think for smaller requests, I don't think it hurts. I think it helps. We certainly understand as bankers that, and we actually like to have that other source of income. If we can see how it can make sense, and if we can see how it all can come together with the individual still working at their same job, I've certainly been part of loans where we've had that sort of scenario, and we've been able to put some financing in place. So indeed, I think that's a great thing, and I think it's even better if perhaps in some way it relates to the business idea
True.
that
That
you're looking
makes
to do.
that
It shows
makes perfect
experience.
sense. Absolutely. I love that. Fantastic. Again, a lot of us have, it took me a little while to be able to leave my job to go full time with my business. And I've heard mixed kind of opinions on how that helps when it comes to getting funding. And I think that there's definitely a difference between looking for a bank to offer you funding versus an investor. So if you guys do have any insight on that, on getting an investor, feel free to throw that in, but we will be kind of focusing on the banking aspect. So the next C is capital. So the cash you put towards starting your business. And this may be a really good way for you to show the lender how serious you are about your business based on how much capital you've put in, or even how much capital you have on hand. So I'm going to actually throw it back to you, Don, to talk a little bit about capital and what type of requirements you're looking for from a lender when it comes to investing their own capital.
Thank you again, Danielle. I think the three words you've all heard, or you're going to hear plenty as you start and grow your business, is cash is king. How you document the cash that you used and where it came from. Lenders care about where the initial equity to start your company came from, whether it came from family, whether it came from the income that you're earning as an employee, what your spouse contributes, again, the pieces that we've been talking about in terms of capacity and all. But at the end of the day, I do care about things like tax returns, your personal tax returns. Historically, the last 3 years, show me how you've managed your cash. Show me that you've had it, because in order for me to go to my underwriters, to go to the risk partners, those are the folks that actually help make those decisions about whether or not we can make a loan to any business of any size. They're going to look at the history. How did you manage your cash? And when you're talking about borrowing, whether it's $10,000 or $50,000, or it's Danielle looking for $2 million for her new office space in Nashville, at the end of the day, really what we're all looking for is that history that you've had the cash, that you have current cash, bank accounts that reflect hopefully a healthy balance that's in the black. Doesn't have to be perfect, but a good history of things like keeping your credit in the green, if you will, not even the black, in the green. That there's always a little bit of a reserve, that you've got some savings, that you're managing your cash well, short term, historically, and that you understand what you're going to need your cash for in the future. So it's a bit of a balance of history, what's going on currently in your business and how you're thinking about starting it, and where you think you're going to need cash going forward.
Love it. Fantastic. Doug, I want to ask you, I think many times as business owners, we are unsure how much we need. We know we need a little help, or we may need some help down the line. So any tips you can give us as far as when we're examining and deciding, hey, we want to pursue getting a loan or line of credit, how to determine how much we may need, and especially, for startups, because there are all type of unexpected costs that come out of nowhere many times when you're getting startup that you can't start it, that you can't plan for. So any tips you can give us on that?
Sure. And sometimes us bankers refer to it as skin in the game. We like to see that the borrowers have some skin in the game. So It's not just the bank's money that's on the line. But I can tell you with respect to with an actual startup, let's say we're starting a business from scratch, and we're at First Farmers looking at helping to finance a startup. Generally, we're looking for our applicants to have about 25% of the initial startup budget as their skin in the game. So we'll help prepare an initial startup budget and try to do the best we can to make sure that that's accurate. And then for a startup, generally 25%. For a line of credit to help with working capital, it might be a little bit different. Sometimes we might base those more off of anticipated usage and anticipated revenues. So that can vary with respect to a line of credit. We're not going to put more out there, or we'd rather not put more out there than what we think is actually going to be needed. But at the same time, you got to balance it with, we don't want to underfund an opportunity as well. So there's really a lot that goes into it. I don't know that there's any crystal clear cut answer, but I think the 25% rule is something that I've seen utilized a lot when financing an initial startup.
Yeah,
Fantastic.
it's startups are risky, very risky, and first impression means a lot. If you expect me to take a lot of time with your loan request, then I should see it that you've taken enough time to put together a business plan, a diligent complete personal financial statement. You'd be surprised how many individuals don't take the time and care and complete just a personal financial statement, not the business plan. They might pull something off the internet and follow it. And we can tell just how much time you've taken with it. Restaurants, for example, is very, very risky. Well, if you haven't determined how many square feet you want, how many employees, what your menu is going to be like, how many times you have to turn your tables just to pay the rent. So, there's a lot of questions that go into play. And if you're coming to most banks, you want to see the personal financial statement. You want to see what assets you have. Because you may have equity in your home. Maybe there's no equity. You might feel a lot more comfortable taking a second mortgage. What you have, bringing bank statements would certainly help, so that we can see you have $30,000 or $20,000 in your savings account. Many people have 401ks. I've had people say that they want to pull from their 401k. Well, you got a tax consequence. So you just have to think about what you want to do. You have to know. You can't come to the bank and ask them, what should I do? What kind of business should I go into? Because it's a big difference. You could be a contractor, put it this way, a good carpenter. He wants to move up to be a contractor. Now you have to run the business. You have to pay the payroll. You have to go out and do the bids and do the work too. So you're wearing 3 or 4 hats where you only wore one hat. You showed up at the job site and you're told to do. You need to add this room up, frame it, and you can do it. But now it's a whole different ballgame. So you have to have the mental capacity as well.
John, if I may, John makes a really good point about being prepared, Danielle, and that any small business in any state, whether they're brand new, whether they're a year old, whether they haven't started yet, but being prepared and having the right information to be able to tell their story is essential. It's not even a negotiable sort of thing. I'm an optimist when it comes to financing. If you're telling a good story and you've got enough documentation, the bank can take a leap, the lender can take a leap, but the burden is on you. It's, as John said, it's not how much can I borrow, it's based on what I'm sharing with you, but what options do I have? And the nice thing about where we are in October of 2021 versus 10 years ago is that the number of online resources that allows someone to be prepared. You go to a bunch of websites, or you'll learn a little bit more about Bridge by City later, and all of the access to financial institutions at the local level. It doesn't have to be a big bank like us. It could be anybody, preferably somebody smaller in your backyard who really understands what's going on in your community and has their finger on the pulse. But at the end of the day, the burden is on you, the business owner, the would-be business owner, to tell your story. Small business development centers are online resources that are free, paid for with your tax dollars through the SBA. Almost all of them are locally located in universities, community colleges around the country. Go to lenders, pull their applications offline. As John said, fill out a personal financial statement, become familiar with the questions. And there's absolutely nothing wrong with going into your bank and saying, I'm looking to apply for a loan. Can I set up an appointment to talk to somebody about what are the basics? And if they say yes, you probably have walked into the right bank. If they say no, come back to me when you've got a full application. Go to the next. There are plenty of us out there that want your business, and we're eager to work with you. It's better to talk to somebody ahead of time and make the mistakes without borrowing a single dollar, and then be ready when the time is right.
I love it. You guys jumped ahead and I love it. But I was literally going to my next question was around, how important is it to have a business plan? And you guys have told us it's very important. And many times we get an idea and we just hit the ground running. We don't have a plan in place, no sort of strategic plan. Not only that, the personal financial statement is something that I, as a 10-year business owner, had never heard of until recently. And so actually, I'll come to you, Doug. Can you tell us a little bit about what that is and how we should go about getting one done? Should we just have it on standby? Should we be building it over time as we're preparing to go get funding?
Absolutely. And I'm always glad to help our applicants fill them out. I don't fill it out for them, but I'm glad to go over the form and offer some guidance on ways to approach filling out that form. It can be an intimidating form to many people. And so one thing to remember, I think, for the participants on here is bankers like myself, we have lending goals. So we have incentive to try to help people as best we can. So I just always keep that in mind. But the personal financial statement is basically what you own and what you owe, basically, is I think a somewhat way to put it. So you would list your assets. Typical assets might be a home, a car, maybe some collectibles of some kind or IRAs. And then what you owe would be your liabilities, and that would be your house payment, your car payment, maybe credit card debt, anything like that, student loans. And just put it all out there because, ultimately we're going to pull a credit report anyways, and there's not too much that we're not going to find. So my thought is to just put it all out there. And if you're working with a good banker, you should get some coaching and some good advice as far as what, given what you're looking to do, what reasonable expectations might be.
Fantastic.
So ask for help with the financial statement.
That was a great transition into the next C, which is collateral. So as you're looking at your assets and taking account of all the things that you own, it may be time to look at what sort of collateral you have to offer, especially if you are looking to finance equipment, things like that. So let's talk a little bit about collateral, because I know a lot of times we kind of are like, well, I own a car, so can I go, can I borrow against my car? So how does it work when it comes to a bank looking at the collateral you have and evaluating your credit worthiness to be able to get a business loan? And I'll put that out there and let whoever wants to take that.
I'll go with that. First of all, the bank doesn't want to make a collateral loan. Typically, your collateral is going to be a secondary source of repayment. Your revenue that your business is going to generate, we would like for it to be sufficient to repay the debt. However, if you default, the bank looks to the collateral to help liquidate the negative balance. It's a secondary source. Obviously, if you have the cash to put up in the form of a CD, well, you actually borrowing against your own funds, your own money, at a much lower rate. If you're financing equipment, we'll probably finance 70% of it, maybe a little bit more. depending on whether you're an existing customer with deposit relationships. But most startup businesses doesn't have that available. So, you know, screens are typed, we tighten them, loan to value and everything else because we are a startup. And quite frankly,
You're not a fan. I see that.
not very many banks do startups.
I want to build, if I may, on John's comments, because he's dead on correct. Cash is king, as I said earlier, and I want to my faith as a lender in your business is your ability to repay based on a really good business idea or current or historical evidence that you've made money and you've got excess cash, as we've been saying all along, capacity to be able to pay that new debt. Collateral is helpful. The collateral, as John said, is there if you're in a default situation. Sometimes that's called the Hail Mary, or the business truly goes bankrupt or something like that. And there's theoretically collateral that would pay off our debt that you would sell. And I think John and Doug and I would all say the same thing. No one, not a single lender out there, anyone with any good reputation wants to sell the house that you live in or take the car that you need to get to work and take care of your family as anything other than knowing that you can handle debt, big pieces of debt, and that you've got that history, and it's nice to know it's there. It's a nice to know factor. If there's extra collateral, you know, you're lucky enough to have a family member that maybe wants to co-sign and they have a house that's free and clear that you can borrow against that value. Well, that's a comfortable thing, but that's not the reason that any bank wants to make a loan. We want to make a loan because we believe in your business and your ability to repay the debt, not because you have a nice house on Main Street or a farm that you inherited from your grandmother that doesn't have a mortgage on it. That's not going to work. So it's, again, back to the basics. Do you have a sound business plan? Do you have historical information, financial information that shows who you are with a personal financial statement or a business tax return, business financial statements, that sort of thing? That's the important part. Collateral is just one piece of the puzzle.
Fantastic. So again, great transition into the fourth C, which is conditions. So being prepared to demonstrate that there's a market for your business and a clear purpose for the loan. And so I would imagine you would do that with your business plan, but are there other ways, or is there other research that's done by the lending institution to determine the condition?
I think we may have lost Danielle for job. There she's back. Terrific.
I'm back. Sorry, my computer had a crash. Sorry. So
it's okay. We had some great questions in the chat room that we can get to whenever you're ready. So it's all good.
Fantastic. Well, I was asking, are there other ways that a lending institution, other than your business plan in hand, are there ways that a lending institution that would research to determine if there is a market for your business?
Well, in many cases, we have prior experience with you know, particular types of industries, so we can generally draw on that experience. I would say that the business plan is probably the most important component in that regards. But then I just think the general experience from the banking team, the lending team, and, you know, just circling back to collateral, we don't always have collateral. Sometimes many banks will do a small amount, you know, anywhere from 10 to 25,000, just based on a good solid credit score. And then I think when we talk about collateral, it's a good way to bring in the value of the SBA. Oftentimes, if everything looks good and we've got a bit of a collateral shortfall, that's when we turn to the SBA and utilize perhaps one of their programs where they might offer a guarantee to back that loan. Those are my thoughts on that.
That's a great point, and I'm glad that you brought that up, especially because we have Don here with us this evening. And so I think many times we don't necessarily understand how SBA lending works. We know that the SBA is the Small Business Administration. Ideally, you know, we just think, oh, we can go out and get a loan from the SBA. and that's not quite the case. So Don, can you give us just a quick rundown of how SBA lending works?
Sure. Very, very simply for everyone's benefit, I hope. So the SBA has been out of the direct lending business full time. Oh gosh, since Ronald Reagan was president. That's how long it's been. What they do get involved with on the direct lending side is only in terms of disaster relief. So the emergency disaster loan program, EIDL, as you all probably are familiar with that over the last year and a half. So God forbid, and John, you're sitting in New Orleans and you've had your fair share of bad weather, to be polite, that has affected your community as an example. And that's stretched up all the way up. I'm in New York and I've seen hurricanes affect us and our backyards as well. The SBA is a great source for smaller loans for the short term. Where the SBA is very effective for you as a small business owner or an entrepreneur is through some of their other more indirect programs. I mentioned earlier the small business development centers. Those are free counseling services. That's through the SBA and the local college community. That's one direct way you can get your business plan done, et cetera. But to get back to the lending program that Doug was making reference to, there's one big house, as we call it, one main program called 7A. And as Doug said, what it provides essentially is this guarantee. It's not quite an insurance policy, but for the purposes of our discussion, think of it that way. So if Doug or John or I at our institutions made a loan to Danielle, and with all good faith, she pays her loan on time and everything is great, but she's newer at it, so that guarantee is going to make us feel a little bit more comfortable to make the riskier loan, give her a longer payment period, maybe even a fixed rate, and put her in a spot that makes that debt more palatable. Now, again, that Hail Mary situation that I described before, Danielle, for all of her good intentions, it's not working out, and she's trying to make do. We don't want her house. We don't want any of those things. We want to see her recover and get on to the next good thing. So we've got that guarantee from the SBA, from the Small Business Administration, that's going to pay us a certain amount of cents on the dollar. On some of the small loans, 90 cents on the dollar. So whatever's not paid off yet, the SBA is going to pay back the lender. For some of the bigger loans, 75%. There are other programs that the SBA offers, including 504, which is really towards real estate and big asset purchases like big equipment, that sort of thing. And that's a different kind of structure. But for most of us, we utilize the 7A program. During Paycheck Protection, there were more than 5,000 lenders across the country, both virtual, the fintech companies, you probably heard that term, the folks you go to online. Frankly, I'd probably go to a bricks and mortar like Doug and John. You can knock on that door and you know where they are. But at the end of the day, especially as a small business, you want a human you can work with, and you want to take advantage of that SBA program. Somebody who's going to explain it to you in person. SBA.gov is great, but it's just a website. It's a lot easier to go talk to your banker about the program and how it really works.
Fantastic. That was great. Thank you so much, Don, for telling us a little bit about SBA lending. And we're going to transition into our last C, character. So this looks at your educational background, business experience, your personal credit. So this is what I think a lot of us are worried about when we walk into the bank. We think, oh God, they're going to pull my credit, what's going to come up. And that's the only one factor many of us thought was, important. Yeah. And so tell us how important it is, Doug. How important is that personal credit, that background, your experience in that industry? How important is that when you're walking into a bank looking for a business loan?
It's very important. There's no way around it. It is very important. And what we're really going to be looking for is, have there been any recent late payments on anything? What sort of level of revolving debt is out there currently? Are there any tax liens or garnishments or anything like that might show up? So you can have perhaps a score that might be on a little bit lighter side, but really still have fairly clean credit. So, I don't know. I think a good banker would also help coach on that as well. What can we do perhaps to clean things up? What are some ways to pull your credit report without applying for a loan? There are some ways to do that. And I generally coach my applicants if they have uncertainties around their credit or if they express things I guide them on how to go and pull up their own credit report right now. And let's take a look at it and see. It may or may not be as bad as what the applicant may think. So it is a key component. It truly is. There's really no way around that.
Absolutely. And I'll tell you guys, freecreditreport.com, you're entitled to annual creditreport.com. I'm sorry. You can go to and you can get your credit report from all three bureaus for free annually. So know what's on your credit. I think that's the important part, is knowing what's there.
And ask questions and ask questions, because you also have a right with Free Credit Report, Danielle. That's fantastic advice, because you pull those credit reports from the three main agencies, something might be wrong. And unfortunately, also in this day and age, as folks do everything from identity theft, or there's one small credit card, someone took out a department store card in your name and it's only $500, but it's a ding on your credit report, and you get to challenge that for free. So again, you're the educated consumer, and knowing what's on that credit report is important. There was a question earlier, and if I may, there were two that to marry up a little bit. I think it was Tanisha Thornton who asked about a steady stream of income, and then it followed a little later by a gentleman by the name of Isaiah Davis here on the call, who talked about, well, I paid off my debts. And as Doug was saying, and I know John's got some comment, I know he's going to make some good comments as well. When we're looking at a credit report, you walk into your lender, you should walk in, just like some of the commercials you might have seen recently in media. You know what your score is, what's behind it, what's on it. And if you've paid off your debts, Isaiah, well, good for you. How much were those debts? How quickly did it take you to pay off? You're armed with that information. The same way that if you've invited somebody over for dinner, you should be able to tell them what the ingredients were. If they say, well, I'm allergic to flour. Well, you need to know what's in the bread if you're going to serve them bread. So you better be able to describe the ingredients as well as you possibly can, because that only puts you in a position of strength. It gives us confidence as lenders that you know who you are, your financial history, your financial story, and you can demonstrate that all of the things that you've done show that you're responsible, that you've got good character, that you're familiar with how to manage money, and all of this points to success. Keeping a small balance, paying it off, having another balance, paying that off, paying off your student debt on time, all of those things are equally important. So know what's behind the credit score, not just the credit score. Please.
Great advice. Thank you so much. Go ahead, John.
Absolutely. Everything you said was right on target. And we see these credit bureaus every day. And the borrower doesn't realize we've seen where they've been, where they are right now, and where they're going. And they may be going straight to the bankruptcy court. So there's a history there. There's a history. Performance, non-performance, how readily you're in and out of your credit cards, how you're accumulating debt too quickly maybe. And the thing is, you deserve a conversation with the officer who's reviewing it. So if some of the problems that appear in the credit bureau is from having a sick child, you express that. Maybe your wife was ill. Maybe you lost your job for 6 months. We can't read your mind. And especially if you work in an environment where the lender may just receive a loan package request. He may not get a chance to actually meet with you. He may give you a call. And so you have to be very determined that you need to have the conversation in person with them if possible. And be prepared. Be prepared. First impressions mean a lot.
Wonderful. So, that was great. Thank you so much, John. And so one thing we didn't touch on as much is business credit. So as someone who's maybe been in business for a little while, you may have established a business credit card, and you may have a credit score for your business, have your Dun & Bradstreet number, all those things. So Doug, is that something that is considered when you're coming in and applying for a business loan?
Yeah, a lot of people don't realize that a business builds credit as well. And when we initiate a credit application, we do also pull a business credit report. For a startup, there's not going to be anything on there. But for somebody that's been in business a little bit, like you alluded to, maybe has a business credit card or had some sort of business lending history in the past, you can build a good business credit history just as you, or bad, just as you can build a personal credit history. So know that banks, do pull those as well. And again, for a startup, there's not going to be anything there.
Yeah.
But for an established business, a business credit card is a great way to start off that and manage it well.
Yeah. Great point. I want to back up because there's a great question in the comments from Michael Hollins, who's a bankruptcy attorney here in Nashville. And he has a question about bankruptcy and how's a bankruptcy showing on your credit and how that weighs when you're actually applying for a business loan.
Well, here at Liberty, consumer 2 years, we won't entertain the loan if they haven't been discharged for 2 years.
Okay.
And we're not likely to move forward unless there's evidence of a significant change in the progress of the company coming out of bankruptcy. So we'd probably be very reluctant to do anything right away. We would probably be looking for 2 years of coming out of that bankruptcy as well.
Okay.
I'd probably
Fantastic.
piggyback on that. Probably similar for us as well.
Yeah, and I'd
done
say
loans.
remember, yep,
We've
Bill,
done loans for people that have come out of bankruptcy after a while, and they've shown that they've repaired and rebuilt. And since they've discharged the bankruptcy, things are going well. So it's not going to hurt you forever, but it's going to hurt for a little while.
and knowing what kind of bankruptcy, it was 7, 9, 11, what chapter, and your attorney, as Mr. Holland said, he can probably provide clearer insight as to what kind of bankruptcy and the cause to explain why it occurred. Again, was it for medical reasons or you forgot to pay your Verizon bill? That's two different things here. But I want to, if I may, just to build on something that Doug was saying a little earlier. When you're looking at the complete picture in terms of business credit, do a 360. Yeah, you've got your Dun & Bradstreet, that your D&B, as we call it, the Dun & Bradstreet number, but that's self-reported income. It's not always reliable, that sort of thing. How about getting referrals from your suppliers, the folks that you owe money to? So if you're a newer business and you've been working with suppliers to get food, you're a restaurant, the folks you order your produce from, your meat, whoever it might be, if you're whatever it may be, a beautician, and the suppliers that you get your products from, your landlord that you've been renting from, who knew you from church or knew you from a friend of a friend and gave you a lease and all that, but you've been making your payments on time, you haven't missed a rent payment. Letters like that are helpful in the beginning stages to show that you've had these obligations, you've met them. Again, it's personal. And oddly enough, in this day of space age and everything is fast and we're doing conferences online and all that sort of thing, what your neighbors say, what your suppliers say, what folks can say about your character, again, goes back to all the C's that Danielle was alluding to earlier. They all are components. So ask those suppliers to write your referral. Let them write a letter to the bank to whom it may concern. Danielle McGee pays her bills on time. I gave her terms. I gave her a 60-day term. She pays her bills on time. It's not just your Visa card or your MasterCard or whatever it may be. It's also that sort of thing. So ask. Don't be afraid to ask your good supply relationships to vouch for you.
That is something I never heard of. And that is a great point because you're paying somebody. More than likely as a business owner, you are paying
They know
somebody.
who you are.
Yes.
Yep.
That is fantastic. So, I mean, really, when you're walking in and you are applying for a loan, you have to do whatever you have to do to build your case, right? Like we're building our case, we're getting our business plans together, and that's just adding to our case that we're building for the bank to give us the loan. So I love that. That is a great idea. A few more questions, and then we'll start to talk about a little bit about Bridge by Citi and how they're helping Black business owners get loans. So my next question is, as a business owner, again, we may be looking down the line. I know there are a lot of folks that are looking futuristic, 3 years from now, I may need a loan or a line of credit. So what should we be doing right now to start to prepare ourselves to be able to go and get a loan down the line for our business?
I think you have to do the same due diligence you would use in whether you were looking to buy a new house or move to a new apartment. How much room do I need? Everything from gathering information on what could my utility bill for 1,700 square foot office space. What the insurance would cost. You can call your insurance agent and have a one-to-one conversation. This is someone who sold you life insurance, not life insurance, but maybe your homeowner's insurance, and tell them what you're doing. And he can probably seek out that information for you. In the meantime, you're gathering information on your expenses. Okay, you know how you're going to generate your revenue for the most part. If you're in a restaurant business, you got to sell. You got tables, got to turn. If you're in real estate, you got to sell properties. You have to rent them.
Mm-hmm.
So from the expense side, you really have to be. You can't get caught off guard. So you have to really do your due diligence. And there's ways of finding out what your approximate utility bills would be. What your insurance costs, your liability insurance.
So I've been really just keeping a good account of what's going on with your business. So there are free tools out there, Wave being one of them. QuickBooks Online is like $12.99 a month or so. So I think it's important that you, as a business owner, start to establish ways of bookkeeping and keeping some sort of books.
Numbers too.
Say that one more time, John.
You have to understand the numbers. Just inputting the information and having no knowledge as to what it means, whether your inventory is moving or not moving, or what specific inventory is moving. Just plugging in the numbers. So if you're doing it yourself, you have to ask yourself some questions. If you have an accountant, make him earn his money. Have him explain to you. Too many people turn over their work to an accountant or a CPA, and they get back a finished product without asking questions.
Yeah.
They don't know whether they're doing well or not.
Yeah, there are a lot of ratios. there are a lot of ratios. I teach this stuff and I'm still like, oh God, what's the quick ratio? Like there's so much that you need to know as a business owner, but it is important to have those resources in place, those people to help you. Now you can get a fractional CFO, so you don't have to have someone that comes on full time with your business, but it's important to have someone, especially if you're not a numbers person. I want to touch on one thing that's really important that we didn't touch on in the 5 C's of credit is the importance of having a relationship with a bank. And what sort of bearing, how important that is when you're walking into the bank and you're saying, hey, I need a loan. How important is it that you have a business bank account, preferably with that bank, maybe a credit card or some sort of other sticky relationship with that bank? Don, tell us your thoughts on that.
As I said, thank you, Danielle. In my introduction, talking a little about myself, 30 years plus of doing this, and I talk about having a kitchen cabinet of advisors in place. Holy Trinity. And that Holy Trinity is a terrific certified public accountant, not an accountant. This day and age, you need a CPA, somebody you trust who can look at your numbers, give you good advice, not just about how not to pay taxes, but how to prepare for your financial future. There's a little bit of a give and take there with the CPA. Having a great attorney that you can talk to and consider some of the ramifications, everything from buying property to how do I take equity from an investor and that sort of thing. And then third, and maybe the most important for the long-term life of your business, is having a bank that is looking at your whole relationship, not just a loan. Are you in a checking account? If you don't write a lot of checks, then hopefully you're going to get a free checking account or a low fee account to start with, or a savings account that you link to your personal account if that lender allows that to happen. But looking at the whole relationship, your personal accounts as well as your business account, and someone who's going to work with you. You've got to have a kitchen council of those three. And if your lender, if your bank is not working for you, regardless of who they are, big, small, again, I'm an advocate to start with a local lender. They probably have their eye on the prize. They understand what's going on in your community. That being said, there's someone down the street, another local lender. You've got to hold up. We're businesses too. We're just bigger. hold us accountable to providing a good service for you, you are still in the driver's seat. There's no reason to apologize for accepting anything other than great service from a lender, a bank, period.
I love it. I'm going to ask this question and then we're going to transition into talking about Bridge by Citi. We may have time for another question or two because we've gotten some really good ones. At what point should a business, the question is, at what point should a business take out a line of credit? And I think this is something that's a very pertinent topic for me. I just posted on LinkedIn about a week and a half ago that I was having a cash flow situation. And so we have had about $90,000 in invoices out, but people still had to be paid and our account was low, And so luckily I have a couple of lines of credit for the business that I was able to tap into to pay my contractors. And I tell that story because a lot of times it seems so far-fetched, but cash flow is a real consideration in business. It's something you should really be looking at, what your cash flow is. And I think that is where you may start to make some decisions about taking a line of credit. But Doug, do you have any thoughts on, when a business should think about taking a line of credit?
Well, I think from the beginning, but you have to be very, very careful with a line of credit. It's a very, it can be a very dangerous tool. It takes discipline. It takes a lot of discipline because the last thing we would want is for you to use that line of credit and not be able to pay it back down. And almost like, it becomes a credit card that's maxed out where you're just making an interest only payment month after month after month. And it no longer has value to you anymore. So you really need the discipline. Many people have that, some don't. You have to have the discipline to not use it for personal use, things of that nature. But I think from the beginning, it's not a bad idea to start talking about a line of credit, maybe as some form of insurance. And maybe a line of credit for some people might be a small credit card. Maybe they don't need a very large line of credit, but maybe just a credit card on the side that they can use in case of emergency.
Another thing you can go to your bank for. So I think that's an important part. And someone in the comments, Tatanisha Smith said cash flow is key, and it is. And that's one of those ratios you need to know. You need to know how much money's coming in, how it's going out, how quickly you're getting paid. All of those things are so important as a business owner. And those are some of the things that a bank is going to be looking at when you come to them for a loan. So we touched on a lot of information tonight, and I feel like we could have probably gone for at least another hour. So we may go ahead and set up another session because I think this was really, really informative. And there were a lot of questions we weren't able to get to, but I want to be respectful of the fact that it's Tuesday evening and a lot of folks are on the East Coast where it's 9 p.m. So I want to thank our guests, panelists, but also make sure if you're attending, you stay tuned because we're going to talk about Bridge Built by Citi, which is a platform that Citibank has built specifically for small and medium-sized Black-owned businesses to help you to get loans. So we're going to talk about that for a few minutes. But again, I want to thank my panelists for joining me. This was amazing. I learned a lot myself. I know the audience learned a lot. And I will follow up with an email out to everyone because I'm sure they're wanting to know how to contact you guys. I think someone asked specifically around Doug, who's down the street from us here in Tennessee. So we'll make sure that you have his information, but we're going to go ahead and talk about how you can connect with these same banks through the Bridge Built by Citi platform. Again, thank you so much for joining, you guys.
My pleasure. Lots of luck, everybody. Stay focused.
Thank you.
All right. And I'm going to bring up Rohit.
Thank you, Danielle.
Thank you. I'm going to bring up Rohit.
Hey, this is Danielle again from Black Business Boom, and I am here with Rohit Mathur from Citibank and specifically working on the team for Bridge Built by Citi. I am so excited to have learned about this platform that has been built to help minority business owners connect with banks to get lending. Rohit is here today. He's going to tell us a little bit about the platform, the process, and how to go about getting a loan through Bridge Built by Citi. Hey, Rohit, how are you?
Good, Danielle, and thank you so much for your time. Hope everyone enjoyed listening to all the great speakers we had today. The only thing I could think of that's better than John or Don or Doug is to have access to all of them, and that's what Bridge Built by Citi does. We identified in the market a couple of years ago that the big issue sort of for small and medium-sized businesses was getting them access to capital. We wanted to solve this issue by building a platform where we can connect small and medium-sized businesses in Tennessee and across the Southeast, as well as in Colorado, to banks in your market. And that's why we built bridgebuiltbyciti.com. You can visit the site. The process is very straightforward. You go to the site if you're looking for business loans between $100,000 and $10 million. Once you access the site, you're able to complete an RFP. No document uploads needed to complete that. It takes about 30 minutes to finish. And once you're done with that, you get access to 21 banks that are on the platform. Both Doug and John's bank, both of them are on the platform along with various others. We've got regional banks, we've got national banks, we've got community banks. We've got a number of MDIs or Black-owned banks, such as Liberty Bank, which was on the platform, which was speaking with you today. And so we're excited about the platform. We're hoping to help drive a lot of small and medium-sized businesses to the website to see if they can compare their options and get the best financing for their business.
I love it. I think it's brilliant. It's an amazing idea, and it is such an easy to use platform. Rohit, do you want to go ahead and share your screen and just show us what to expect when we go to bridgebuiltbyciti.com?
Yeah, absolutely. Let me share my screen, and I can just kind of walk through very quickly what it looks like. This is it. So you kind of type in bridgebuiltbyciti.com, and that takes you here. As you can see, it's 3 simple steps. You complete your RFP, like I said, which takes about 30 minutes. Again, no document uploads, just some information about your business, some high-level financials, what your loan needs are. Then banks like the ones you heard today and 19 others are on the platform who will provide you responses based on their evaluation of your RFP. You can then compare those responses. So let's say you get a response from 2 or 3 banks. You can now compare those responses and see the ones that are best for you, and then connect directly with those banks. A lot of people on the panel today talked about the importance of having a banker. We agree. The goal of this platform is to really connect you directly with that banker and really provide you the tools to find the best financing for you. I'll scroll quickly to our banks. I've mentioned these a few times, and I'll keep repeating it because it's the most important part of the platform. There are bankers from each of these institutions who are waiting to sort of review your request, and based on their evaluation, hopefully provide you some indicative terms on what they could do for your business. And so that's a little bit more about the platform. Like I said, bridgebuiltbyciti.com is the easiest way to get you there.
It's so exciting to have a platform like this, and to have had our great panel earlier today with helping us to prepare, because a lot of times, you find that businesses don't really know how to prepare for funding, what's going to be required of them. Can you give us a little information on what's in the RFP? Sure,
absolutely. The RFP really has 3 sections. The first section is what are you looking for, right? So you kind of start here and you say, well, let's get started. You put in the amount, you put in what kind of loan you need, you type in what kind of type of loan, right? And you may say, look, I'm not really sure right now because I know I need the money, I know why I need it, but I don't know what I need it for. And that really starts the process. But that's kind of information piece, number 1. Number 2 is a company overview, right? When were you incorporated? Tell us about how many employees you have. Give us an overview of your business. You heard the panel talk about the story about your business, right? We've given a lot of opportunity within that form to really demonstrate that story, to talk about how your business operates. Tell the banker all you want them to know about the business. Again, there's a lot of opportunity to provide as much detail as you want, but you can also provide enough detail just for the banker to kind of understand enough about your business. And then the last section is the financial overview. Again, no document uploads or sort of connecting to your bank or anything. The process is really straightforward, where you come in and you enter in your past 3 years of revenue, net income, your EBITDA. It shows you how to calculate that EBITDA, some balance sheet metrics, and that's kind of it. We think the entire process, sort of end to end, to complete that RFP could take anywhere from 30 to 45 minutes. But then once you've completed that, you have 20 banks that get to review it. So we think overall it helps save a lot of time and hopefully helps you get the best loan option for your business.
I love that. And I love that it goes out to all of the banks and they're kind of bidding on your your RFP, so it gives you some options. You get the opportunity to see the best terms for you, decide what works best for you, and then engage directly with the bank. Another opportunity for you to start to build banking relationships. And again, these banks are everything from local banks to national banks. So it's really amazing that you guys have built this platform to give us more access, and for us to start to understand a little bit more about how that process works of getting credit for our business or a loan for our business. So I'm just blown away by the platform. I'm really excited for it to be live at bridgebuiltbycity.com. Again, that's bridgebuiltbycity.com. You can go out there, submit an RFP. It takes you less than an hour to submit your business information, and it's going to go out to 20 banks for them to tell you how they may be able to support you in reaching your business goals. So an amazing platform built by Citi. I love that, Citibank is a bank, and you guys are not only helping business owners, but helping minority banks that are on your platform as well by connecting them to the business community. So it really is twofold and really helping minority-owned businesses and minority-owned banks. So we really appreciate Citibank, your collaboration and really helping to educate the Black business community on how to prepare for funding. So if you happen to have not caught the whole webinar, make sure you go back. It was amazing. We had a great panelist that answered lots of great questions to help us to start to develop our businesses and change our mindset around growing and scaling our businesses and getting the resources, the financial resources we need in order to do that. So we really appreciate the partnership with Citibank on really educating the Black business community. And not only that, by creating a platform that makes it easier for us to form relationships with banks and get the capital we need in order to scale our businesses. So again, Rohit, thank you so much for joining me. It really was such a pleasure to have you and a pleasure to put this together with you and your team.
Yeah, thank you, Danielle. That was a great session hosted by you or arranged by you. That was really excellent. We're happy to put together more panels of that kind to really help educate, get the word out, not only about Bridge, but also about all the learnings from those great bankers who've been on the panel. I counted each of them had, I think it was 30 years, and 40 years of experience. So that's a lot of experience to be able to listen into and again, if you're looking for business loans, definitely visit bridgebuiltbycity.com. I should mention there's no cost to use the website or to connect with a bank. It's all free. But we're hoping that we can connect you, not only find you options and connect you with a bank, but ideally connect you with a local or regional bank, like one of the ones that you heard on the call today. But again, thanks a lot, Danielle, and great to talk to your entire community of listeners and community of who are part of your organization.
Thank you so much, Rohit. It has been such a pleasure. And make sure that you go and check out bridgebuiltbycity.com. Let's support this platform that was built specifically to help our business community to get the capital that we need. Visit bridgebuiltbycity.com, and thanks so much for tuning in.